Google Classroom or
It's,
not yet?
yeah.
Oh, you visited that already. Very nice, very nice. Okay, so let me try to show you my screen. Okay, all right. Do you guys see the screen? You do? May somebody confirm if you can see the
Yeah,
screen?
I can see, yeah, we can see.
Okay, perfect. All right. So, okay. All right. So, yes, from Luam. Okay. Let's begin now. Revenue and expenses. So, Unit 5. And this is just the continuation of our Unit 4 lesson, okay? But in this case, we guys are going to do the T accounts, all right? Okay, let me make it a little bigger so we can see some definitions here. Okay, probably a little bigger. Okay. All right, so Unit 5, guys, is about revenue and expenses accounts. Look at the first sentence here, guys. We will now expand. Expand meaning we are extending, okay? We will now expand the owner's equity into capital, revenue, drawings, and expenses. Okay, what do you mean by that? Before, guys, before, we have three major T account rules, right? So one for asset here. Do you see this one? Assets. Yes, you do, right? Okay, the next one is like liabilities, okay? And the third rule is for, look at this, it became like expanded. When I say expanded, it became like extended, it became longer. Look, the owner's equity, guys, owner's equity here, right? This is the third rule. It was now subdivided into four categories. One, two, three, four. And this time, guys, we will be very, very specific. What's the content of owner's equity? Okay, for example, look at this one. The first division of owner's equity is capital investment. When we say capital or investment, this is the time when the owner put an additional money for the use of the business. Do you understand that? Uh, for example, um, the owner invested additional $5,000 to the business. So in that way, guys, the investment is considered as capital. All right. So what will increase? Of course, normally, guys, what will increase is cash goes up, right? Because this will become the business cash. And then on the other side, normally it's owner's equity, right? But this time, see the increase here, the increase here? But this time, guys, we will classify that as part of capital specifically, not owner's equity terminology, not this one. We will not put OE, but we will put capital. If the person's name is Alvin, you will put Alvin's capital. Okay? If the name of the person is Rose, that is Rose capital. All right? And you put it here. Increase the OE when there is an investment. You put the number here on the credit. Okay? On the credit. So, sir, what about the second one? Okay, supposing it's a revenue, all right? We perform a service to the customer. Let's say, as I said, let's say we clean their backyard, cleaning service, all right? And they gave us money. Of course, the normal thing is cash goes up because we receive money from the customer. And then the credit is normally what we do is we put it in owner's equity increase, which is credit. But right now, I provided another T account called revenue. Okay, revenue. And this will be on the credit side. So, guys, revenue can increase the OE. That's why we put it on the credit side. Okay, so again, same things with capital. They are the same role. Capital and revenue. All right. Capital and revenue can increase the OE, therefore we put them on the credit. Do you understand that? Uh, Say yes if...
Yes, teacher.
Okay, very nice, very nice. Okay, So from now on, we will not use the word OE anymore, but we will use instead these four terminologies. Okay? Now, if capital and revenue can increase the owner's equity, the next two T accounts, guys, namely the drawings and expenses, both of these guys can decrease the OE. Look at that. Decrease the OE, decrease the OE. Therefore, we put them on the debit always. What are they? The first one is drawings. What are drawings, by the way?
The money,
To withdraw money from the bank or to make expenses outside.
Okay. Who else would like to say an answer? Thank you, Paul. Anybody else?
the money taken by the owner
Okay.
for his personal use.
For his first, oh, very good. Okay, so both of you guys, Paul and the lady, you guys are correct. So another word for that is withdrawal. That's what Paul pointed out. Okay, what's the purpose of withdrawing money? And the lady said for personal use. Okay, any amount of money, guys, because we know that if you are the owner of the business, sometimes you are not included in the paycheck. Sometimes, right? Because you are the owner. So what you do is normally to withdraw money because that's your business for your allowance, for your expenses, right? So I mean for personal use. If money is being withdrawn from your account, of course your OE will decrease, and you put it on the debit side. Okay. So again, these are money that you use for personal use. Okay, the other one is expenses. So what are the expenses? Remember, we studied the income statement last time. Sometimes we have hydro expenses. What are the expenses then, for the business? Uh, can you name some? We have hydro is given. We have salaries
Render,
expense. What's
render,
what's that?
render, maybe render, rent.
Renter.
Yeah,
Oh, what about
if
that?
if if um,
How can we
uh,
treat that as an expense?
means if someone has a business, they he or she uh, uh, take the building for rent. They
Oh,
pay for the building.
okay, then that's called rent expense. Very good. Okay, all right. The rent expense, correct. That's correct. Okay. Anybody else? Any other expenses? Yeah, that's correct. Sometimes we are renting the building. The building does not belong to us, of course. That's part of the expense, rent expense. Okay, what about insurance expense? Is it part of the expenses, guys? What do you think? Sometimes we are paying for the insurance of the building, right? So that's part of that. Donation expense. What other expense do you know? Uh,
Delivery.
Delivery
Uh,
expense, correct? Anything else?
maybe current bill,
Oh,
electricity bill,
electricity. Let's put it in the
maybe.
hydro now. Okay, hydro
Yeah,
expense. Or probably, let's say there is a problem in your car. You need repair. Okay,
yeah.
so you put car expense, and that would be okay. Car or repair expense, and so on and so forth. So in short, expenses can decrease your owner's equity. But sir, what's the main difference between drawings and expenses? So just focus on this. When we say drawings, you normally withdraw money for personal use. Okay? We do not know where will you use it, but you took that money because you want to use it as an owner. But in here, for the expenses, guys, it is very clear. They will state it in the problem. For example, they repair the car of the business for, let's say, $200. So, of course, it's business thing. You put like car expense, something like that. Always, guys, look at the rule: debit, debit. All right. Okay, so again, capital or investment and revenue, you put them on the credit because they both They can both increase the OE. While drawings and expenses, you put them on the debit because they can both decrease the OE. Any questions so far? So far, so good? Are you guys good?
Yeah.
Okay, so in short, the word owner's equity will not be used to name the specific account. We will use now the four things under it. Okay? Of course, we will also use the assets and then liabilities. Let's do it. How to record in the accounts. All right. Let's look at this one. Okay. All right. Do you guys, can you still read even if it's that I submit for 125? Is that okay? Can you read it? Let me know. Or you want to make it bigger?
Little bit bigger, sir.
A little bit bigger. Okay. So let's make it 150. Okay. That's better?
Yeah.
Okay. So, all right. So let's begin. The transactions below came from the book of C. Piccolo. C. Piccolo is a person, okay? An owner of a law firm which offers legal services to customers. Probably, yeah. Law firm meaning they are, they could be lawyers, okay? And then customers come because they want legal services, okay? Let's see, July 1st. What are the services that they do? Okay. Receive $175 cash from a client for drawing up a new will. What is a will, guys? WILL. Do you have an idea what a will is?
Yes.
Okay. It's like the last will and testament, right? I hope that you guys are very familiar with that. Okay? Last will. It's like when, let's say, for instance, time comes that we will pass away, right? We need to make it clear that, oh, this money will go to my child, first child, and this thing will go to my second child. Do you remember that one? It's like a legal kind of like paper that you need to do so that in case we accidentally or someone accidentally dies, right? We know that part of the properties will go to the first child, the second part will go to the second child, and so on and so forth. If we don't do or make a will, guys, here, normally the rule in Canada is, let's say, yeah, you did not make a will, and then somebody accidentally die. Where will the, let's say, for instance, the property go? Who will claim the property if there is no?
The government will take 20% of the money.
Look at that. The government will take over. All right. So that's why it's very important for us to, they have the so-called living will already, guys. Living will. When we say living will, even if you are still like strong, okay, even if you are still strong, you can make up one. All right. And I know that there are many agencies that offer that kind of like service. All right. If you guys are very, very rich, yes,
Yeah.
okay.
So much.
Yeah. So feel free to, that's also a smart decision, actually. All right. So that they will not like, lose anything when time comes. Okay. So, anyways, so we are after that. Received 175 cash from a client for drawing up a new will. So, what shall we do, guys? What's gonna happen to our cash when we receive cash from the customer?
Increase.
Increase. Okay, debit, credit.
Debit.
Okay, so I'll put July 1, and then we have a 175 increase in cash. What's the rule, guys? Assets, guys. Assets increase on the debit, right? The other one is the opposite. Okay, now, what's the other one? What's the partner of that? Cash, and then
Accounts receivable.
accounts receivable. So, meaning, where will I put the accounts receivable?
The asset.
Debit, credit.
It will decrease.
Credit.
Decrease.
Okay, wait a second. Wait, I think this one, guys, is the client did not owe you before. Okay, so let's just conclude that the client came to our place. Let's say we are the owner, okay? The client came to our place, and after doing the service, they paid us cash. So it's not like they did not indicate that it was like a customer in the past.
So they have to put a new
Drawing?
client.
No, 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 not that way. It's like a cash customer. Do you know what a cash customer mean? When they do the service, they immediately pay. You know what I'm saying? After the service, they immediately pay. So it's like a cash customer. It's not like, oh, sir, can I pay you like after 30 days? No, not that way. Immediately, you collected the money after the service are done or is done. So which part of that? So cash increase already. What's the other one? It's not accounts receivable in this case.
The owner equity.
Drawing, sir.
Okay, so see, it's owner's equity, but which category? Is it a capital, drawing, revenue, or expense?
Revenue, I think.
And the
Thank you,
answer
sir.
is okay, and the answer is revenue, guys. So I'll put here on the credit. Look at this, guys. This is July the 1st, right? July the 1st. Why revenue, guys? Remember this. When it comes to like services performed, okay? When we do a service, all right? Or when we sell something, the money that we receive or we will receive next time, okay, will be recognized as part of the revenue already. When we get the cash, it's like income, something like that. Do you understand that? It's like
Yes.
income, but of course, it's not the net income yet because you know how to calculate the net income, right? We subtract the total revenue to the total expenses before we get the net. So this is part of your revenue. Okay? And we know what revenue can do to the OE, right? What's the rule? What's that thing that I showed to you?
Yeah, it can
Revenue.
increase the OEs.
Correct. Revenue can increase the OE. That's why it's on the credit. Okay? Any question with transaction number one?
Yes, can we put number 2 in the account receivable?
Oh, okay. So let's see number 2. Okay, let's go. Let's go there. I'm excited to do number 2. Okay, let me make it a little smaller because I don't see the remaining. Okay, bill client $1,200 for legal services to close purchase of home. Bill means you send a bill to client who did not pay the services we already provided. Oh, okay. So is this cash? Did the customer pays cash immediately or no?
No.
Not yet. So therefore, what's this?
Accounts receivable.
Very good. So this is an accounts receivable here at the bottom. Okay, this is, wait, what date? July the 2nd, right? Okay, July the 2nd. This is 1,200, right? 1,200. Okay. So why, sir, why accounts receivable, sir? Because it's just like a bill, all right? It's just a bill. So for example, sir, what if the customer receives the bill, let's say after 1 day? Let's say they received the bill and they decided to pay it. So on that day, of course, there's another, what's this? There will be another transaction. But for now, because we just give the bill, all right, and there is no payment given yet, so record that as part of your accounts receivable, okay? And you're expecting the customer to pay you afterwards. So what's the partner? Remember, it's a service. We did a service, but the customer did not pay it. So what's that? Accounts receivable.
Service revenue.
Service revenue also. Okay? Guys, it is recognized. What principle of accounting is that? It's called accrual principle. Let me put it here. I think did I discuss that one? Accrual accounting. Okay, in accrual accounting, guys, revenue is recognized. Okay, revenue is recognized or recorded. Okay, when services are completed. Okay, so whether you receive receive cash or not. When I say not, they promise to pay you after probably 30 days. Who is coming in? Anyone from the group? Okay, I thought somebody is getting it. Okay, sorry. Look at this one, guys. Accrual accounting, guys. Revenue is recognized, all right? Recognized or recorded when services are completed. So regardless of you receive cash or not. So when you receive cash, of course, cash goes up and then revenue goes up. All right. But when, for example, sir, it's a promise to pay, let's say after 30 days, the customer will pay us. So of course, we recognize the revenue, record it as accounts receivable on the first side, debit, and then credit revenue. Okay. That's called accrual accounting. As long as the
Why we don't put the cash also increase?
I increase already the accounts receivable here. Why not cash? Because it's just a bill. We just send the bill to the client. And they did not say that the client paid you yet. Do you understand that? We completed the service to the customer. We send them the bill. You know the bill. It's like a receipt, right?
Yeah, yeah.
Okay, and it is understood that when we release it, of course, it's on the way. Okay?
That means he didn't pay yet.
He did not pay.
Oh, yeah, yeah.
Okay,
I
it's still on
promise.
the way.
Okay,
Yeah.
okay,
Okay.
understand.
All right. So in short, our accounts receivable goes up by 1,200, and we recognize that as revenue because we are done with the service. Sir, is there a chance that the customer will, let's say after receiving the bill, is there a chance that the customer will hide and not pay us in the future? And the answer is yes. Okay. Sometimes, guys, that's the truth in the business, and we will study more of that in accounting too if you're going to move there. All right. If you're planning to enroll accounting too. So, bad debts. They call it bad debts in accounting when clients cannot pay anymore. But for now, let's stay with this. All right. Okay. Now let's go to July the 3rd. Any question in July 2? You guys are okay? So far, so good?
Yes.
Okay, let's move on to July 3rd. Receive $600 from the client as partial payment of, okay, sorry, my off is, wait, let me just fix that one. Okay, off, it's full. Off. Oh, look at that, guys. The bill on July 2nd, look at that, on July 2nd, right? It's connected, the second and the third. The client paid 600. Did the client pay in full or no?
Yeah, he paid.
In full, F-U-L-L?
No.
Not the full amount because he owes us
No, it's
1,000.
only 600.
600. It's like half of it, right? From the
Yeah.
client as that's the word partial. Partial means part of it, okay? Of 1,000 billed on July 2. So what's gonna happen to your accounts receivable when the client is paying?
Decrease.
Okay, so
Decrease 600.
it will decrease by 600, and that's
But the
July.
cash will increase.
Very good. So July 3, wait. Accounts receivable decreased by 600 because the client paid us, right? And then, of course, what's going to happen to our cash?
Increase.
It will increase because we collected cash from that customer. So that is July the 3rd. So
What about the revenue here?
revenue? Oh,
There's,
the
there is
revenue.
no?
No, if we record another revenue, it will be doubled. Okay?
Why
Revenue,
we can't put in the revenue?
because there is a revenue already recorded. I mean, see, 1,200 is part of the revenue, right? Here,
Yeah, you mean 1,200?
the 1,200 is the total revenue that we are supposed to be collecting, right?
Okay, okay.
If we will add another 600 here, the revenue will be
Yeah,
overstated.
more.
Okay, too much, too
Yeah,
much.
okay.
All right, now let's go to July 4th. Paid $95 for TELUS for telephone bill received today. TELUS is like a internet service provider, phone service provider, right? like Bell or like Rogers. Okay, so we paid $95 for the phone bill. So what's that? What happens to our cash then when we pay the bill? Let's get that
Decrease.
figure. Okay, cash will
Decrease.
decrease. Okay, $95 here, and this is on July 4th, right? 7/4. Okay, what's the other part? What kind of expense is that?
Account payable.
No.
No. Owner's equity.
Okay, what part of expense? Advertising or telephone?
Telephone.
Okay, here, I can see telephone expense here. Okay, guys, it's not an accounts payable because they say they did not indicate that the payment was, I mean, what's that? The meaning of that is, look, you received the bill today, right? I think it's very clear here. You received the phone bill today, and then because we are the owner, right? After receiving the bill, I paid it. Do you understand that? It's not they say, we waited for 2 days before we pay it. Do you understand what I'm saying?
Yes.
Today, right then and there. So in short, our cash goes down by 95. That's correct. And of course, what kind of expense? As I said, it will be a telephone expense of 95, which is done on July the 4th, correct? Expense, guys, is always on the debit because let's see the effect again when we put the expense on the debit. All right. Expense can decrease the OE. All right. Always put in your mind, guys, the general rule for expenses, debit. Okay. Put it on the debit because they can decrease your owner's equity. All right. Tell me if there is a confusion, if you guys are okay.
Teacher,
Go ahead.
first you said in the top there is two type of expense, right? Expense and drawing, right?
Yes.
So when you will put it down there, like a company expense and your own expense will be all together.
Okay. So wait, let's see. When I say expense, guys, all right, these are specifically expenses of the business. All right. They will try to make it specific. Whenever it's an expense of the business, record that as part of. We will use the word expense. That's understood that this belongs to the business. Are you talking about, let's say, owner's expense or personal expense? What about that?
Yes, teacher.
Okay, if it's
Like
a
you
person,
say drawing and expense. So what I understand is drawing is part of your own expense and the expense.
I know, I got you. I got you. Okay, so both of them again can decrease the owner's equity. But the scenario is like this. Let's say, how can we know, sir, that it's a withdrawal or a drawing rather than expense? So normally, guys, when it's an expense, they will try to specify. Okay, so let's say the business paid for the advertisement amounting to $500. So we know that that is an advertising expense, business-related expense. Okay, but when it comes to, I think there is an example for drawings there. Let's see. Okay, all right. So we will go there. Okay, just hang on. Let's see the difference between expenses and drawings. I will tell you. Okay. So for now, I think it's question number 7. Okay. Let's go there later in the drawing. July the 5th. Let's go to July the 5th. Received a bill from the Calgary Herald. Calgary Herald is an advertising company. Okay. They do the advertisement for us, and we paid them $150 for advertising the new location of the practice. The terms of payment allow 30 days to pay. The bill will be paid later. Okay. Calgary Herald made an advertisement for us. The amount is $150. Did we pay them yet?
No, it's account payable.
Very good. So how did you know that we did not pay cash?
Because after 30 days, we have to pay.
Okay, it's very clear there. The terms of payment allow 30 days to pay, and this will be paid later. So in short, what's going to happen?
It will be expenses.
Expense. What kind of expense?
Advertisement.
Very good. So how much is the advertisement again?
150.
150, and this is your July the 5th. So listen to this, guys. For the expenses, it's almost similar to revenue. Look at the accrual accounting. It also follows the accrual accounting, okay? As long as we are done receiving the service, okay? Even if we promise to pay the person, we recognize that as your expense already, okay? Because, guys, in the old times, they are using an old kind of accounting. They call it cash accounting, okay? But this time, at the present time, we are using accrual accounting, which is very, very nice to use. In cash accounting, we do not record any expense unless we release cash. Do you understand that? We don't record any any data unless we release cash at that moment. Okay, so you have to wait for like 30 days before you make a record. But in here, in accrual accounting, we immediately record it even if there is no payment made. Okay, this is very, very helpful, guys, that we have learned accrual accounting. So again, they advertise for us, they are done with the service, and even if we are not releasing cash yet, we have to recognize that as part of your advertising expense debit. And of course, you said, what's the partner, by the way? Where shall we put the other 150?
Account payable.
Accounts payable. Debit, credit? Debit, credit.
Credit, for sure.
Credit. Of course, because this is an extra debt that you need to pay in the future, correct? It will increase because you did not pay it yet. Okay, that's just like the first time on July 5? Yeah, July 5th. That we owe the advertisement. We did not pay yet. Okay, now I think this one, July 6th, 5 and 6 are connected. Paid $100 to the Calgary Herald as partial payment of their bill for 150 received on July 5. Okay, did we pay the full amount, 150, guys, or no?
Not yet.
Okay.
We have 50.
We paid 100. How much did we pay? 100, right?
100.
Okay, so what's going to happen to your cash then?
It will decrease.
Okay, so I'll put 100 here, and this is July the 6th, right? Okay, what's the other one?
Accounts payable.
Okay, debit, credit.
Debit.
Debit, because it will increase, decrease.
Decrease.
It will decrease because there's like a payment, right? Okay, 100, and this is your July 6th. So if I ask you, okay, quick question only. We are not calculating it, okay? So how much would be the accounts payable balance, the remaining?
50.
50, very good. Wow. As easy as that. Okay, now, let's go to 7. Okay, I think this is the question related to what your classmate has said earlier. How can we distinguish, okay, the personal thing? Okay, so look at this. The owner withdrew $100 for personal use. Sometimes, guys, they will put a note, where will the owner use it? Sometimes in some sentences, because he will be purchasing, let's say, a very nice equipment, right? So the point there is, you know the word personal use. Do we have to know where the owner will use this one? And sometimes the answer is no, because it's none of our business. Okay? So as long as the sentence goes like this, the owner withdrew money for personal use, we will categorize this as part of your drawings. Do you understand that? That's how we distinguish. Sometimes we didn't know where the owner will spend the money, but put a note if you're the accountant of the company. Okay, my boss withdrew 100 for personal use, and that's it. Sometimes we don't need to itemize. All right, we don't need to be specific. So in this case, what's gonna happen to the business cash if the owner withdrew $100?
Decrease.
Okay, so debit, credit?
Credit.
Credit. Okay, so this one is for your drawings. The business cash will decrease. And what is that? Is that a drawing or an expense?
Drawing.
That's a drawing, right? It's very clear for personal use. So therefore, debit, credit,
Debit.
debit. So why debit? Because what's the effect of drawings in the OE?
Increase.
Decrease.
Look. Okay. Drawings, it can decrease the OE. So the rule here, guys, is if it's drawings and expenses, just put in your mind, they are always debit. Okay? Because the effect of that is it can decrease the OE. Always debit for drawings and expenses. All right? So how much is that? It's 100 and the date is July 7. Drawings is 7/7. Okay? Last. Oh, wait. Look at this one. The owner invested 5,000 cash to the business. What's this? What's this act? I mean, is this a drawing, an expense, or an investment, or a revenue? What's this? The owner invested additional 5,000 cash to the business.
The cash increase and
Okay.
then the
All right. Wait, cash increase.
Investment.
Cash increase by 5,000. So July 8. What's the other one?
the next capital.
Capital.
Okay.
The capital also increase.
Debit, credit.
Credit.
Debit. It increase. It goes up.
Credit. Okay. So normally credit, and that is 7/8. So look at that one, guys. What's the rule again? It's an investment. Look at this. Investment is a capital account. Okay? And always together with the revenue, guys, capital, revenue, they are on the credit because they can increase the capital. Okay? Easy rule actually, but we need to remember these things. Okay? So in short, all the transactions are done. Now, if I ask you, I want you guys to find the new balance. All right? Let's calculate. So let's go to cash. 175 plus 600 plus 5,000. What's your sum? What's the answer?
5,775.
Okay, correct. 5,775. Okay, how about the credit? 95, 100.
295.
295. Okay, and what's the new balance if I ask you? Subtract the two. I'll put it here now. Okay, equals this minus this.
500. Yeah, 5.
Correct? 5,480. Okay, let's try to make it bold, and that symbolizes the new balance. Okay, so why under the debit? Because debit is bigger than the credit. Okay, subtract and put it under the bigger number. Okay, accounts receivable, how much will this be? 1,200 and 600. And of course, debit, credit.
600.
Debit.
Debit,
Yeah.
because 1,200 is bigger
More.
than 600. Very good. Okay, so let's put it as a bold. Okay, what else? Okay, accounts payable, how much?
50.
50. Debit, credit?
Credit.
Credit. 50. Because credit is bigger than the debit. Okay, put it on the credit. Bold. Okay. All right. Let's go now to the capital. Do we have to change the capital here?
No.
No. Same. Okay. What about drawings?
Same.
Same. Okay. Revenue. This plus this. How much is the total revenue that we have? It's easy. 1,000.
1,375.
Okay, so that is our balance, new balance. Okay, let's go now to advertisement. Advertising, same. Telephone, same. Anything else? I think that's all, right? Okay, so if I ask you guys to make a trial balance, of course, you guys are going to use this amount. You know what a trial balance is, right? Trial balance?
Yes.
Okay, so we will add all the debits. We will add, I think there is one here. There is one here. Okay, let's see. Oh, is this the one that I did? Yeah. Is this another trial balance or is the same trial balance? Oh, let's check. Okay, cash is 5,480. Let's check the accounts here. Oh yeah, same, right? 5,480, correct. Okay, I'm going to click again. Accounts receivable is 600. Yeah, that's the same number here. Oh, I put a solution there. Okay. Accounts payable is 50 here, credit here, right? And then capital is 5,000, credit. Drawings is debit 100. Fees earned, why did I put fees earned? What name did we put there? Revenue or fees earned?
I think revenue.
Service revenue. Okay, so let me just make it clear. So fees earned, what's the word? Or service revenue, that's fine. Service revenue. Because revenue comes in different names, okay? It could be fees earned, it could be service revenue, it could be rental revenue, it could be, what other revenue? Repair revenue, and so on and so forth, as long as there's a revenue or earned. Okay, advertising expense 150, telephone expense 95, and look at the debit, guys. When we add them up, this one, the sum is 6425, the credit is 6425, and they are the same. So in short, total debits and credits must always be equal to prove that there is no mistake in your T accounts. Okay? Any questions so far? This is your check. Add all the debits, all the credits. If they're the same, you guys are in good hands. So far, so good? We guys are okay?
Yes, I think so.
Okay, so I have a question to you. Okay, when it comes to playing the video, especially the last time's video, do you find any difficulty, or are you guys okay? Were you able to access the video last time? I think it's the Unit 4. Okay, let's go back. What? Okay, here. The two videos that I posted, were you able to... wait, is this accounting one? Yeah. Were you guys able to access this?
Yes, sir. Yeah.
It's clear? I mean... Because for some other students, they say, sir, sometimes we cannot open the video. Did it happen to you before, or you guys are all okay? It seems that my class is okay. There is no problem with that. Okay, anyways. All right, so let's not worry about that. Okay, let's go to classwork, guys. Everybody, there is a classwork here. When you click on revenue expenses, there is a practice here.
Sir, I haven't finished the assignment 4. I'm still working on it.
Today's the due date, okay? Until 11:59, so I can
Okay.
include it in your midterm, okay? All right.
Yeah.
All right, so leave it like that. Okay, so your work that you need to do today is number 9, okay? This is about Gibson's Service Center. What do? They repair automobiles on a cash or credit basis. What is credit basis, guys? Credit basis, what's that? It says they repair automobiles on a cash or credit basis.
That we can pay later. The customer can pay later.
Very good. That's simply it. If you want to pay cash, you can pay it now. All right. And then credit basis, meaning the customer can pay later. All right. Accounts in the general ledger include, okay, look at this one. There is a beginning number for cash, 10,000. Accounts receivable, 3,500. Tools, equipment, and so on and so forth. Transactions that occurred during October are given below. So what's the requirement? A, set up a T account ledger, then record the balances and the following transactions. So if I ask you guys, how many T accounts are you making? Can you tell me based on the given? How many T accounts are you guys going to make? Up to telephone expense. Can you count for me?
Yeah, maybe she just got an error in the error.
How many? How many T's are you guys making?
11.
11. Very good. So how did we know? Cash, 10,000. That's one. Accounts receivable, tools, equipment, accounts payable, drawings, capital, repair service revenue, advertising expense, rent expense, and telephone expense. So in short, 11 the accounts. Did I make it already? I think I made it already. Let's see the sheet. I provided an answer sheet for you. Oh yeah, I made it already. Okay. All right. So
Teacher, there is tools and equipment. The same or is different?
That's different. Okay. They will tell you. Okay, you don't have to worry about it.
Okay.
I think along the way they will tell you. Okay. All right, and then okay, guys, don't forget that there is a beginning balance. Look at this one, cash 10,000. So if I were you, before I record the transactions, October 2 to October 11, here below, do you see this one, right? October 2 to 11. Make sure that you put first the beginning balances in the proper place. For example, cash is 10,000, right? So you know this account, cash. So you put the beginning balance on the debit side first, 10,000, and then the date if there is a date. Okay? Before you start recording your October 2, 3, 4, and so on and so forth transaction. Do you understand that?
Yes, sir.
Okay. So in short, all this beginning balance, put them in the proper place first. Okay? Now, letter B. Prepare a trial balance. So let's say you entered all the transactions from October 2 to 11. You now prepare a trial balance. So I showed it to you. This is your trial balance, right? Here. All the debits must be equal to the credit. Sir, how are we going to arrange like here, the accounts? So the normal order is you start from asset. Okay, let's put it by the side here. Okay, assets first, followed by liabilities. Liabilities, followed by, because capital has 4 areas now, right? So we start first with the capital, followed by drawings, followed by revenue, and then the last is expenses. Okay, that's how you arrange, guys, this, all right? Don't put, oh, I'll put telephone expense first on the line instead of cash. No, don't do that, okay? Asset, liabilities, up to expenses. That's the normal order. So this note is already posted in your Google Classroom if you want to go back, all right? Sample T accounts is here, okay? And the general rule, guys, if you want to see, it's in your Google Classroom. So yeah, it's almost similar to what we've done, and the only difference is there's like a beginning balances. So if I were you, I'll go now to my, okay, go to your Unit 5, please, everybody. Go to your Unit 5 revenue and expenses, please. Okay, let's open your blank sheet here. If I were you, I'll take a photo of this one so that you guys can work without distraction later on. Get your camera, and take a photo of your number 9. All right, finished. Take a photo. All right, and now let's go. Everybody, if you guys can open Accounting 1 answer sheet. All right, let's open this one. And I want you guys to make a copy, okay? I want you to make a copy so that you can touch it. I think I put the blank trial balance here. Okay, see, look at this one, guys. There is a, what's this? A scroll left and right here at the bottom, because somebody asked me last time, sir, I cannot see the right side. Here, look, click and then hold and then move it to the right. And you will see the trial balance given there. Do you understand that? Okay, if you want to put it back on the left, okay, click, hold on the left side. Sir, scroll up, scroll down here, guys, on the left, if you want to put up and down here. Okay? Up. Okay, click, hold, and then up, down. All right? If you want to move it there. Any questions so far? You guys are good?
So, sir, you said we should create a copy and name it what?
Okay, make a copy and then start doing your exercise. Everybody, file. And
yeah,
then
we should name it what name, sir, please?
Okay, you can name it according to what, whatever you want. That would be fine for me. If you want to put your name there, that's okay. All right, let's say Paul, Accounting 1 answer sheet, that's okay. Or you can just leave it like this, copy of Accounting 1, that's fine, and then okay.
Okay.
All right, can you start now? All right, start it on your own, please, and probably at, let me go back to you at 10:30. All right, I'll be quiet. I'll mute myself so you guys can focus on what you're doing. Okay, there are answers. I didn't see the chat. 1375. Okay, all right, from Arvinta. Okay, so I'll be quiet and I want you guys to work on your own. Okay, start it now. Okay, so we have an answer here from Batana and Fatima. Let's see. The trial balance debit and credit both are 46 to 50. Okay, let's see. Let's see for Fatima. Fatima Jalabdin, she says there is a debit of 44 to 60 and a credit of 48 310. So they are not the same. Fatima, it should be the same. So try to find out what's the problem, okay? For Vicky, oh, look at that. 46 to 50. I think we have two same answers here from Vathana and Vicky. Okay? Fatima, try to work it out. I need one more confirmation. If it's like 46 to 50, I would conclude that there is a correct answer. But I'll show you. I'll take it up so that you guys can know. All right? Yeah, let's just wait for one more answer. Bathana and Vicky, they have the same answer. Fatima, there is like a short difference. Very small difference. Very small difference. Okay, one more. I'm waiting for another person to type in the answer.
Yeah, teacher, I got it wrong. I got it wrong. I missed it somewhere.
That's okay. That's okay. Oh, I am not saying that their answers are right already, Paul, okay? I am not saying that their answers are right already.
Sir, I was wondering if we can do it together.
We can. 3 more minutes. I'm just waiting for one more answer. And let's see. Sometimes it's a good... Oh, Nehal. Okay, Nehal gave the answer already. Okay. 46 to 50. So I can say probably that there is a correct answer now. Okay, so... All right, so leave it like that and let's try to do it together, okay? Check your answers for those who are finished. Check if they are right, okay? All right, so let me just take a quick photo of the problem and then let's put them all in the answer sheet. Okay, all right. So let's start. Okay, so the first step is we need to put the beginning balances. All right, so cash, if you're going to read that, it's 10,000 here, 10. And then I'll put, okay, because there is no specific date, let's just conclude that that's the beginning balance. No need to put any date there. Okay, after cash, we have accounts receivable of 3,500. Why do I put it on the debit? Because they are assets. Okay, tools, 5,500. Okay, and then after tools, we have equipment, 25,500. 25,500, as easy as that. We also have to put accounts payable, 2,200. Credit, guys, because it's a liability, beginning balance, okay? And then we have, okay, capital. I think capital is given. It's 42,300. Credit also, 42,300. Opposite the asset, right? And then we have, yeah, I think that they are all the beginning balances. The rest do not have any, okay? Now let's go to your October the 2nd. It says here that you paid the monthly rent of 4,000 to the near company. Pay the monthly rent. Okay, so what did you do there? So we have rent expense, right? Rent expense of how much? That's $4,000. And that date is January, February. October is the 10th month, right? 10/2. Okay? And of course, our cash will go down by the same amount, which is $4,000. This now is October the 2nd. All right? Again, the expense is called rent expense. And of course, cash will go down by the same amount, 4,000. Number 3, repair Jim Jones' car and bill him $535. Okay, so that is like an accounts receivable of 535 increase because this person just received the bill. Jim Jones is our customer, okay? And that is 7/3. Sorry, 10/3. Okay, so we send the bill, and that's part of our repair service revenue. Okay, so 535 over here. And then we put October the 3rd. Remember, guys, the customer was billed for the services that we completed. Of course, revenue will be recognized, 535. And of course, that is an accounts receivable because the customer did not pay yet. All right? Okay, next, number 4. Purchased a new set of tools for 1,275 on credit from Tool Supply. All right, so easy, guys. The tools, additional tools were purchased, but on credit. On credit means we did not pay yet. So therefore, our tools will increase because that's an additional tool, 1,275. The date is 4/10/4, right? Okay, and that is an accounts payable because we did not pay that yet. Okay, 1,275, and we put 10/4. All right, ask a question if there is. If there is a confusion, let me know. Okay, I'll go to 6. Received a bill for 475 from the Gazette for advertising. So this is like an advertising expense, guys, but we did not pay cash yet. Why? Because it shows that we just received the bill. If they say that we paid it after receiving the bill, then cash will decrease. But here it's just a bill, okay? So what's going to happen? What kind of expense is that? It's called advertising, and the amount is 475. Always debit, guys, for the advertisement, okay? And this is, what's this? The 6th, 10/6. Did we pay cash yet? The answer is no. Therefore, this is an accounts payable, 475. This is 10/6. Okay, again, it's an expense. And because we did not pay that yet, we just get the bill. So it's an accounts payable of 475. The next 6, paid auto supply 750 for amounts owing to them. So in short, we owe auto supply before and we are paying cash to them right now. So 750 here, cash will decrease by 750 because of the payment. This is 10.6. And then of course the accounts payable will go down because it says that we are paying 750 of the accounts payable. So
Is that 10.8 over there beside 475?
beside 475, 10.
Yeah, right here. No,
10.
no. Around under the accounts payable. 475.
This one?
Yeah, and then beside it.
10.6.
Oh, 10.6. Okay.
Okay. So the 750 here is another 10.6 because there are two things that had happened there. Okay. 750, a decrease in accounts payable. So that's 10.6 also. Okay. Okay, guys, give me a second. All right. I need to, I'll be back quickly. One second. Okay, so let's continue. We will go now to number 7. You pay the telephone bill received today. So look at that. Guys, this is the difference. You received the telephone bill and then you paid it right then. Okay? So in this case, what kind of expense is that? It's called a telephone expense over here. Okay? Expense is always debit. Okay, let me click here. This one would be $85. And because we paid it right then, our cash will go down by the same amount, which is 85. And the date is 10/7. Okay, so this, did I put the date here in the telephone? Oh, I'll put it there. 10/7, October the 7th. Okay, I did not put it in the accounts payable because the bill was paid immediately. So therefore, I put it under cash. Okay, if it says that you did not pay it yet, it's just like the bill, then it will fall on the accounts payable. Okay, 10th. The owner, P. Gibson, withdrew $500 for his own use. So what's going to happen to our cash? Of course, the business cash will go down by 500. And this is 10/10. Okay. And what kind of, what part of the owner's equity is that, guys? Personal use is called, that's the owner's drawings. Okay. And drawings are always on the debit. So 500 over here. And then let's put 7 the 10th. Okay. So drawings, because it can decrease the equity, that's why it's on the debit. And then cash goes down by 500 as well. Next, the 11th.
So why is it July?
Say it again. Oh,
why is it July?
Yeah, why is it July? 10/10. Okay. There you go. Okay. It's okay now, Paul. Thank you. All right. Received 215 cash from a customer for a tune-up and oil change done today. So this is cash, guys. It's like a cash customer. So therefore, what shall we do here? Cash goes up by 215. And this is on the 11th, 10th, 11th, October 11th. And then, of course, that's part of, because that's a service, guys, that's part of your revenue, okay? Revenue, which is 215. And that is 10, 11. All right? Again, cash of 215 will increase and revenue will increase because this is like a cash customer. Now let's go to the next. Receive 175 cash on account from a customer who was sent a bill last month. Oh, so the customer who owes us, all right, is paying us now. So of course, our cash will go up by 175. That is on the same date, 10, 11. And then of course, what's going to happen to the customer's accounts receivable? It will decrease by 175 because of the payment. So it will be on the October the 11th. Okay, any question about the T accounts before we get the final total? Any specific transaction that makes you feel like confused? Or so far so good? Okay, so I consider that as yes. Silence means yes. Okay, so let's see. Add all the debits equals sum. Let's make it, okay, add them all. The debit is 10,390. Add all the credits, sum, open bracket. Okay, highlight this, close bracket, and then we got 5335. Let's make it a little bigger so you can see well. Okay, so 10,390 debit, 5335. Okay, let's subtract the two and put the difference in the bigger number, under the bigger number, equals this minus this. And then we got 5055. That's your total, or the new balance for the cash. And for the accounts receivable, add this two equals this plus this. Okay, that is 4035. And then let's bring down 175 here. And after bringing that down, subtract the two. 4035 minus 175. The difference is this minus this equals this. Is somebody somebody has a question? Are you guys speaking? I don't hear you so well. Anyone? Are you guys okay?
We're here.
Okay, you guys are fine. All right, so let's see. I'm excited to see if the answer that they put in the chat is right. Okay, tools, 55 plus 1275. The sum is, okay, this plus this. We got 6775, right? Bold it. Equipment, because there is no other balance. This is, you don't need to touch that. Same. Accounts payable. So let's bring down 750 here. 750. Let's add this 322 plus 1275 equals sum. And then let's do. And pakibaliktad nga yung bacon ko. Okay, close this one. Okay, the difference between the two, 3950 minus 750, we put it under the bigger number, equals this minus this. We got 3,200. Very good. Okay, and then OE, capital, same. Drawing, same. Service revenue, there is like a change, equals this plus this. And then we got an answer, 750. That's your new balance. Advertising, rent expense, same. Telephone expense, same, because there are no other numbers there. Okay, now let's put all the numbers here in your trial balance. I'll try to scroll on the right. Here is our trial balance. What's the name of the business again, by the way? It's called Gibson's Service Center. Okay, so I'll put it there. Gibson's Service Center. Okay, this is called a trial balance. Just to check if all the debits are equal to all the credits. What's the last date of the transaction? It's the 11th, right? So you put it as October 11, 20 something, whatever the year is. Okay, let's start with the cash. The new balance for cash is 5055, so I'll move it here. Okay, 5055. Okay, let's go now to the accounts receivable. Accounts receivable is 3860.
Yeah.
3860, right? Let's go to tools. Tools would be 6775. All right. Wow, I think somebody's right. 6775. Okay, let's go to the equipment. How much is your equipment? 25. Okay, same, right? 25,500. Accounts payable. That is 32, right? 32. Okay, that's credit, guys. 32. Oops. 3200. Capital. 42,3. All right. 42,300. Let's go to drawings. 500 debit. Okay. And then service revenue. We have 750 on the credit. 750. Okay, expense, all of them, all expenses are debit. So we have 475 advertising, 75. Rent expense is 4,000. And then the last is telephone. We have 85, right? 85. Ilabas mo naman. Ayun, ipasok mo. Frozen pa naman yan. Hindi ko nakita eh. Okay, so let's add them all. The moment of truth. Let's find out. Equals Sam. And somebody, I think, got the correct answer. Let's highlight from top to bottom. Close bracket. Ooh. Okay, so let's check first if the credit is also right. Equals Sam. They must be the same.
Credit is also right, teacher.
Oh, 46 to 50. Now, let's see. Let's go to the chat. Okay, 46 to 50. Okay, Vathana, you're right. Vicky, you are right. Nehal, you are right. Who else? Anyone from the group? Who else got 46 to 50?
Yeah, I'm right.
Fatima, yes. Okay, you made it right now, Fatima?
Yeah.
Okay. Who else? What's the problem, Fatima? Which one?
I did it that the cash and everything put the credit. I don't know.
Exactly. That's the same thing I did. That's why I got 61.
Okay. So you and Fatima have like the same idea before?
Yeah,
now...
I used the old plan that we did. I put all the credit on the credit and all the this on the. That's why the liability went all on credit,
okay.
and the assets also went all on debit. That's why.
Oh, okay, but it's okay now, correct?
Yeah, it's okay now. Yeah.
All right. So who else have the same answer? What about the others? They are still probably in.
I'm just gonna copy the whole thing after you post it. So
sure, it's just there. Okay.
Yeah.
So everything will be saved automatically in our Google Classroom.
Correct.
Okay. So again, guys, it's just like a few reminder. I want you guys to go back to the video if it's not that clear to you again. All right. I'm going to upload the video later on. Yes.
I just want to talk to you after class if you have time.
Sure. No problem. No problem. Yeah, sure.
It's about the assignment 4. The part 2 is couldn't quite get it, so I was wondering if you can
just like a little assistance probably. Yeah. Okay, so I'll try to. Okay, no problem. All right, so do you have any question about this? Any question? Do you think you will?
Question, let me look for it and ask.
Okay, go ahead. All right, so
I'm looking for it. I'll ask you.
Go ahead and look for it, Paul, okay? And if you find one, let me know. What else? Okay, so yeah. I am expecting all the assignments to be handed in until tonight, okay? The past assignments, all right? Up to assignment number 4.
Teacher,
yes?
when is the midterm marks?
You will be getting it, guys, probably on Wednesday, Thursday.
Next week?
Next week, okay? But for us teachers, we need to submit it to the office earlier. Okay, so that's the reason why I'm asking you guys to submit the assignments until tonight. If you cannot do it until tonight, especially for those who have late assignments, okay? Okay, let me just mute somebody. Okay, so if you cannot hand it until tonight, guys, it will be marked as 0. Okay, and do not be surprised why I got 0. I reminded you already. Okay.
Yeah, we already submitted.
And that's very good. Okay, very nice, very nice. All right. So what else do we have to remind you of? I think that's it. And then, as I said, you have guys a long weekend on Monday, so you don't have school. All right. Feel free to enjoy those days. 3 days off.
Yeah.
Okay. You have to enjoy that.
Also
Okay. All right. So I will not give any other instructions for the day, but I'm just going to check your attendance. Okay.